Hey everyone, it's Ben Hardy here, and in today's video, I'm going to be talking about the sales month of January because I think this is one of the most important sales months that we have had over the last couple of years. But before we get in this video, as always, if you want to save time and money the next time you purchase a car, link to my car buying guide in the description down below. And then if you want to see more videos just like this, then I recommend you subscribe because I post content every single day. Let's get into it. Let's start off by talking about the big numbers. So these first numbers come from Cox Automotive, and what they state is that January of 2023 saw an increase in sales by about 3% compared to January of 2022. And so what that means is that this January was 3% better than last January. However, January did have a decline of about 20% from December, which is what almost always happens in January because, again, you have all of the holiday shopping in December and then that dies, and January is usually, a thinner month for car dealers, and so that's to be expected. However, the big news is that based on December's sales numbers of 2022, the industry was expecting that we were probably only going to pace to sell 13 million cars in 2023. However, since this January was so strong with sales volume, we are now on pace to having about 15.5 million new cars sold in the 2023 sales year. Now, the next set of numbers that we need to dive into is wholesale values with used cars. And what we have basically seen over the course of January is that they pretty much have remained flat. You'd have 1 week where wholesale values would decline by 0.4%, and then the next week they would increase by 0.3%. And so obviously that's not completely flat, but that basically describes January is just kind of like a slight ping pong up and down with wholesale values where they're pretty much flat. And so certain segments, slightly increased in wholesale value, and other segments slightly decreased in wholesale value. Now, if we look at the numbers year over year, every single segment is down compared to January of 2022, which is expected because, well, we saw massive declines over the course of 2022 in general. So compact cars year over year are down by almost 12%. Luxury cars are down by almost 16%. Mid-size cars, almost 15%. Pickup trucks, about 9%. SUVs and CUVs, about 16%, vans, 12.5%, and then the average, if you put that all together, is 13.7%. And so what this means is that, yeah, the market declined over the course of 2022, but in 2023, the market right now is just kind of sitting there and not really doing all that much. And this is a big justification because I've made several videos where I've talked about how the market isn't really declining like what it used to, and dealers are starting to step up on trades where they're paying a little bit more for customers. And this data shows that, right? Dealers wouldn't be doing this if the wholesale values were still declining at the rate that they were. The next thing that I want to dive into is the whole interest rate situation, because this is something that is putting a lot of pressure on the car market and not necessarily in a good way. So interest rates obviously have continued to increase as time has gone on. And what a lot of dealers are telling me right now is that this is pushing a lot of would-be buyers out of the market for them. So if you look at the average credit score for a consumer here in the US, it's in the high 600s range. And so if you take what that person would qualify for on an auto loan, then you're probably going to be looking at an 8-ish% interest rate for a brand new car. A used car, well, you're looking at like over 10% for an interest rate. Again, someone with that type of credit. If you've got perfect credit, then you can get a lower rate. But again, the average person doesn't have perfect credit. And so if you look at that and then the price of the average brand new vehicle, which is about $50,000, the affordability for the average person is not there because, again, average income here in the US for a household is in the $70,000 range. And so with the 8% interest rate and the $50,000 sales price of a car and the average income, like you put that all together and you're looking at car payments that are over $1,000, and the average person just simply cannot afford it. And so you basically have, this huge block of people, the average person, that just is completely out of the car market now. And so it's creating a lot of interesting things within the car market and definitely downward pressure on both new cars and pre-owned cars, even though the wholesale values on pre pre-owned cars aren't really declining like what we saw before. And so here's kind of what I am seeing on the ground. There are certain brands that are not struggling to sell cars right now. Toyota, Honda are great examples. They have a lot of affordable cars, and those cars are perceived as more reliable, more dependable, and so just a lot of people wanting to go and buy them right now. And so they're slinging metal like crazy. It's pretty interesting to see. But then you look at brands like Dodge, Ram, Jeep, Chrysler, Mazda is another good example. Hyundai is another good example. They're starting to have inventory just stack up on their lots. So much so that they are offering discounts on a lot of their inventory, and the discounts are getting quite substantial. Like I'm seeing a lot of car deals at invoice and even under invoice with these brands on a pretty regular basis now. And this is in complete opposite situation compared to what you're seeing with Honda and Toyota. Like you go into a Honda or Toyota dealership and you ask for a discount on a car, they're going to say pound sand, right? They're going to be like, you know what? We've got 20 people wanting to buy this car. If you want to buy it MSRP, or in a lot of cases over MSRP. And so just understand that depending on the brand that you're looking at, there may or may not be the ability to negotiate based on where people are buying within this market. And then the other interesting trend that is continuing is with the higher income earners, or just, the rich people. That's what we'll just call this. They're still buying cars like crazy. They're still paying crazy market adjustments on vehicles. The example that I'm going to use is the new Ford Raptor R. So January saw a lot of deliveries of Ford Raptor Rs, and the amount of money that people were willing to pay for this truck was just crazy. So the truck stickers for $111,000, which is already very expensive. Remember, this is a Ford pickup truck. But there were more than enough people that were willing to pay $20, $30, $40, $50, $60, $70 plus $1,000 over MSRP without even batting an eye. And so this again shows another line in the sand where you've got these people that have a lot of money, and they still have a lot of money, right? And they're just willing to spend it willy-nilly. And then the average consumer is completely pushed out of the market because, well, they can't afford the payment on a $50,000 car when they're making $70,000 a year and the interest rates are at 8%. So pulling everything together based on the data from January and then what I am seeing on the ground, it looks like the market is veering more and more towards being a buyer's market. And right now is, I think, an especially decent time to purchase a car for a number of reasons. So again, if we look at the used car data, with wholesale values pretty much trading flat, that means that puts you as the buyer in a position where you don't have to be super stressed about your car losing a ton of value, because again, the values are pretty much trading flat. However, on the new car side of things, with certain brands stacking up with more and more inventory, this obviously puts you in a position as a buyer to have more negotiating power and to have a higher chance of having a rebate on whatever you are looking at purchasing. But understand that there are still certain brands and there are still certain vehicles that are very hot in this market. And so you're going to still see market adjustments, and you're going to see some cars that are not going to be discounted off of MSRP just based on the demand that they have going for them. And so also, understand that just because, one manufacturer is willing to discount their car a big amount doesn't mean another manufacturer is willing to do the same, even if the cars compete against each other. And this is going to be something that will be pretty commonplace moving forward. And again, in a normal car market, this is something that just happens. I remember when I was selling cars, right, when I would sell the new Dodges and Rams, we'd have big rebates and big discounts. But then I'd talk to my friends over at the Honda dealership or the Toyota dealership, and they're like, yep, we're selling everything at MSRP. And it's like, oh, different world, I suppose. And so it's just kind of how things work. But again, I think that overall the market conditions are just becoming more and more favorable for the consumer. And, as to my guess for what's going to happen over the course of 2023 with the current data that we have, it looks like car dealers are going to sell more cars in 2023, but they're not going to make as much profit in 2023 because per car profit is decreasing as time goes on because, well, dealers are having to do a little bit more work to put together car deals, which leads to them having to discount cars more. And then, when interest rates are as high as they are, that puts customers in a position where they are already struggling to afford the base payment on a car, let alone that payment with, financing products tacked onto it. And so the avenues for dealers to make money on car deals is slowly shrinking. And so I won't be shocked if by the end of the year, we'll basically be in a position where dealers will be like, hooray, we sold more cars, but then they'll be like, crap, we made a lot less money. So with that being said, see ya.